No Bitcoin, no job. You're joking, right? No. You are. A deep, long laugh. It's 2013 and a fund manager is taking the piss out of his friend about Bitcoin. That's in spite of the fact they're deep into the tech space and often well aware of innovation trends. What he's proposing is a joke. Reinventing money? Why would you need to do that? It's working just fine as I see it. A joke to some is the most serious of matters to others. Are you an investor or an entrepreneur? Maybe you're just Bitcoin curious. Either way, this impacts you heavily. Learn why right now is such an important time on the journey of Bitcoin, how not allocating to the asset carries career risk, and how fundamental analysis can be used to make good decisions. By the end, you will have yet another piece of the puzzle to help you deepen conviction and reallocate to Bitcoin safely. Let's rewind to 2013. Our fan manager is having a good old chortle at their friend's expense. And why not? Indeed, it's a very natural reaction. Many of us, including myself, have had the same thing. Something new, something unfamiliar, something untested. Speaking for myself, initially it was irrelevance, then disdain, then fear, followed by curiosity, a bout of forgetfulness, until eventually I could ignore it no more. Everyone goes on this journey. It is unavoidable. So, wherever you are along the process, take a breath and congratulate yourself. You're on the right path. The truth is, this is a pattern we see play out all the time when it comes to S-curve technology adoption. Now, for those familiar with the fund management industry, you'll know that there are many types of fund managers. So I admit it's a very sweeping analogy. Do they invest short term, long term, in debt, equity, or commodities for a high net wealth family, an insurance company, or maybe even a government? The truth is, when it comes to Bitcoin, though, it doesn't really matter. An innovation in money means an innovation for all capital allocators. Let's bring us to the present day. How is Bitcoin getting along a decade later? Well, it's flying. It's absolutely flying. Clear growth in hash rate, nodes, users. Whilst the asset value hasn't been all that bad either. Indeed, ironically, had the fund manager of 2013 made an allocation to Bitcoin, they would have had a fantastic return for their investors. A fact made abundantly clear by a resource I love, the Nakamoto portfolio. This detailed piece of work is open source and helps to compare Bitcoin with multiple asset classes. It highlights, I quote, investment insights which have been historically reserved only for Wall Street institutions. Bingo. This is exactly what we're after. High grade research that helps us as investors to make decisions. Amusingly, I like this, the genesis story of this resource was someone trying to orange pill a friend who refused to buy Bitcoin. They like to deploy capital into funds. Excuse me. So Bitcoin was wrapped up as the Nakamoto portfolio and sold as a new fund to invest in. And surprise, surprise, the friend wanted in. Who wouldn't want a piece of those returns? Of course, then the penny dropped. Oh, this is Bitcoin, isn't it? Classic. Got you. Yes, yes, it is. This is about as close to comedy for those of us in the investment world can get. Point being, though, as is often the case, one needs to speak to someone where they're at, on their level, whether they be a humble pleb, highly educated fund manager, or high net wealth investor. So, where am I going with this? Well, first off, as an investor, go and look at the Nakamoto portfolio. I certainly found it very helpful. These resources are key to deepen conviction. What next? Well, I want to talk about what it might become known as the great decoupling. Bitcoin has been on a tear. At the time of writing, over the last 30 days, its price has increased by 30%. Brilliant. Bring it on. But what does this mean? Well, there is an inconvenient truth jumping out of the charts of every capital allocator. Apple is up 5%. Gold is up 8%. That's the good news. Real estate markets are freezing up. Bonds are yielding negative real returns given inflation. Otherwise, there are recessionary metrics galore, which all leads to the all-important question, where do you put your money? Let's revisit our laughing fund manager. A decade ago, investing your fund into Bitcoin carried career risk in that people were afraid to do it. It was too risky in their eyes, a joke even. Fast forward to today. And I think we're now at a time where that is reversing. Fund managers are going to face career risk if they don't allocate into Bitcoin. This is a tipping point. Performance cannot be ignored. Whilst the much heralded arrival of a Bitcoin exchange-traded fund will enable an easier on-ramp for regulated capital, not only can professionally managed funds clearly identify why they're going to buy, they also now have a clear how are they going to buy. Exciting times, to say the least. So let me start to wrap this up. Bitcoin is a supply and demand-driven asset class if there ever was one. Supply is decreasing, demand increasing. Both facts that we as investors can clearly deduce with the fundamental analysis discussed. Use models like the Nakamoto portfolio. But furthermore, check the blockchain. Conduct your own primary research. The information is out there. Anyways, this all leads to a simple fact in my mind. Price action long-term is only going one way, up and to the right. Will this moment be the great decoupling? Time will tell. But as far as I can see, there is nothing quite like Bitcoin out there in the market. So if anything can radically outperform, you can guess where my money is. Until next time, thank you. All the best. I've been Jake. P.S. If you're a high net worth investor looking to reallocate to Bitcoin but unsure how, then please reach out via DM or email. Equally, if you haven't yet got it, head to my website, mrjakewoodhouse.com, to download your free copy of my Bitcoin Book Bible, a curated guide of 35 books for every investor jumping down the Bitcoin rabbit hole. Take care.